Good evening. Welcome to the ShadowTrader video weekly for Sunday, March 4th, 2012. The big news this week is the new ShadowTrader.net website, which now has a blog and forum inside of it, which we did not have before. Also a new Twitter feed here. If you want to follow me on Twitter now, it's really easy. Just click follow right on the homepage. The blog is a one-way commentary between myself and all of the ShadowTrader minions and all of you. You cannot comment on the blog, but you can in the forum. I'll get to that in a second. I am posting something called the Peter's Pre-Market Perspective in the mornings in the pre-market, showing how I feel about the market profile and what I'm looking for there, and also some notes, as you can see. Also on March 1st, I got some really good feedback here on this article here, which was a piece on market psychology, I guess, for lack of a better word, on trading the first day of the month. So if you're interested in that, check it out. The forum is a place where everybody who follows ShadowTrader can interact, both with us and each other. You do have to register to post, but you can read posts as you like. So it's already kicked off on Friday, and you can see here, you can go into the different categories, and people are talking about futures and swing trading and pairs trading, golden commodities, etc. So these are the topics here, and then within these topics, you can register and start a new thread and start to interact with other shadow traders out there, which is really cool. All right, let's get over to the markets. I'm going to just start with a simple ES chart here. Let's minimize that. Actually, SPX chart. The week closed relatively without any fanfare, and basically the market's just kind of stuck in a range here. I think that there is propensity for us to come down a bit, only because we're a little bit overextended from the trend line and we haven't touched it yet. But be aware that if we were to come in a bit, this is really just 1370 down to 1353. So this is 17 S&P points here. This is not a big move down. So we haven't had a strong down day in a while, but this would be about 170 Dow points. Just to kind of put things into perspective. Be aware that there is the more dominant weekly trend line below us, which could be a pullback to this area. I am not calling for any such pullback whatsoever. I do not have a crystal ball telling me where the market is going to go. I just want to point out to you that market is really stuck here. Bulls are building a lot of value in this area back and forth, which I'll show you in a second in the profile, and they're not getting anything for it. So just think in those terms, that is one of the reasons that markets start to sell off, is due to exhaustion, right? Because you have people that are buying value. They feel that they're going to be able to sell for higher prices. Those higher prices don't come. It's just a constant grind. I heard a guy on Bloomberg earlier today call it death by 1,000 cuts, and I thought that was interesting. And he was saying, how you get in and you lose a little, you get in, you lose a little more. The market doesn't seem to actually pay you for holding on. So that's certainly been the theme recently. And if we take a quick look at the market profile, which I like to do, in the ES, you can see that it completely confirms that. The black brackets are the value areas where 70% of the volume goes off. In last week's video, I talked a little bit about rotation factor, and you want to look right up in here where it says RF, and you can see that these rotation factors are constantly small numbers, less than 2 digits. It's like +1, -3, whatever. And remember, the rotation factor just simply takes the TPOs here, and if you have a higher high, it's a +1, and a higher low, it's another +1. So each 30-minute period could possibly score a total of 2 points, and then those points are just added on one after another until you get out here to the end of the day, and that gives you your rotation factor. So looking here, it's rotation factor -1, rotation factor +3, rotation factor -8, that's a little bearish, rotation factor +8, that's a little bullish. Those two kind of negate each other, and rotation factor 9 over here. So market is just absolutely not able to move out of this area right now. We're really locked in. Coming into next week, I want you to pay close attention to this level here. Okay, this is 1367.50, 1368, 1368.25, right? Notice that it is point of control 3 days, not in a row, but 3 out of the last 5. That's very, very important. You can see here on Thursday, it caused strong support in the market where there was a little bit of price probe below that area, but not very deep, really only getting into the meat of, at the bottom of where the fat part of this distribution here ends. So anytime that the point of control is sort of copied over for one day to the next or within like a 5-day period, I want you to know that's very, very important. So obviously traders are watching this 68 level very importantly, and there's a lot of value building up here. The question is, what type of selling is it going to take to sort of push us in this direction, or what type of buying is it going to take to push us in that direction? Obviously that answer can only be given to us through market internals. So as you're trading during the day, don't get too excited about a continuation move lower or higher unless you have that really strong internal reading, unless you can see that plus 2,000 on the AD on a bullish day or minus 2,000 on that advanced decline line on a bearish day. Watch for your breath to be 8 to 10 to 1 positive or negative to confirm such a break. So far we haven't had anything like that. We've had just mixed internals over the last few days, and the market is just really kind of stuck in this range. So watch 1368 in the coming week very, very closely. All right, I'm going to leave you with some dividend stocks here that are in play. Put this down, and I'm going to give you 3 names that I've been trading in and out of, that some been holding for a while, some that I have some of now, some looking to get more. ARR is a mortgage REIT currently yielding about 18.6%. I think it's a buy anywhere around $7. I tweeted this one as a buy at 7 a while ago, and it's worked out well. It's trading 708 right now. Obviously, I'm in it for the yield. OLP is a regular REIT, more of a brick and mortar REIT that I like, and I'm pointing it out specifically this week because if you look at the weeklies, right, look at the trend line support. It's actually coming into a possible buy point here. Notice that on Friday's action, it touched down to the penny on that trend line. OLP is 7.76% yield. And another one I'm looking at is PSEC, Prospect Capital. This is not a mortgage REIT per se. The yield is like 11.3%, but they invest in debt of other companies. And I believe this 1050 is looking to be a buy point here, possibly. It's like right in here. Notice on the weekly you've got good trend line support there. So that'd be an area I'd be looking at for possible entry in PSEC going forward. All right, that's all I have for today. Please check out ShadowTrader.net blog and forum. Remember, I'm posting here in the mornings into what I call the PPP, aka Peter's pre-market perspective. We'll be having some more stuff in there shortly. Again, the educational articles, etc. And please do interact in the forum if you want to ask questions of each other, or just you can post charts in here, which is really nice. It's got a lot of nice features here. Just click on register, follow the instructions. It's really, really simple, and take it from there. All right, on behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.